Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, July 18th, 2025. Ron Quaranta here with my co-host David Brill on the super yacht someplace. I believe Josh Klayman will be parachuting in at some point. And our very special guest, the one, the only, Chris Brodersen from member firm EisnerAmper. It's good to see you, gents.
You too, Ron. Thanks for having me.
Absolutely. Let me kick off with the usual disclaimers before we begin. For everyone in the audience, thank you so much for joining us on LinkedIn Live and on X. If you've got questions for the group, please put it in the chat. We're happy to address it. And obviously, nothing discussed is legal or investment advice, and that our opinions really do represent our personal opinions and not necessarily the opinions of our firms. David, Chris, Crypto Week coming to an end. Let's just look at the big target conversation pieces. 3 bills move forward in Congress. Someone correct me if I'm wrong. Genius going to the desk of the president for signature. Clarity Act and the Anti-CBDC Act going to the Senate for debate. The sausage making gets clearer and clearer, and it's uglier and uglier. David, Chris, what are your thoughts on Crypto Week and the outcomes here?
Well, listen, I think the administration wants to just take the win, have their Rose Garden moment and say, we delivered on what we said we were going to deliver, which is meaningful crypto-related legislation. Now the real sausage making begins. I think the Stablecoin Genius Act was relatively easy to get passed. There were lots of guardrails around things like investor protection and audit responsibilities and things like that. Clarity, I think, is going to be a much heavier lift, not just because of the controversy around the roles of the SEC versus the CFTC, but there are some pretty ill-defined terms in there. For example, an exemption for mature blockchains. But what does that mean?
Right.
David, do you disagree?
No, I agree. Look, I think what we've said on this podcast is let's take the win where we can get the win. And I think that getting bipartisan legislation passed on stablecoins is really important. And I was heartened to see more Democrats vote for it than previously. I was a little disappointed that this was, some Democrats had an anti-crypto week, and it didn't land very well with a lot of people. But I do think in the end it was nice to see it passing on a bipartisan basis. Like Chris said, I think there's a lot more clarity needed on clarity, and so I think there's going to be a lot of sharpening of pencils being done, and I think whatever House version comes across, the Senate will, sharpening their pencils, and hopefully we'll start to fill in the gaps in places where there are gaps.
David, Chris, I remember very specifically, David, we had a conversation a week ago when we were talking about this kind of bifurcation of bills, and there was the conversation about Crypto Week coming up. And I remember you and I being pretty adamant that clarity would probably get pushed to post the August recess. Were either of you surprised that clarity moved forward, at least clearing the House and going to Senate?
I mean, I was pleasantly surprised. Oh, right on cue.
Right on cue. The one, the only, Josh Klayman.
Just when we need her most. I was a little surprised, to be honest with you, especially given some of the negative feedback that we received on clarity from the former CFTC chair, Timothy Massad. Is that how you pronounce his name?
Yep.
And a couple of others. But the House pushed it through anyway. I don't know. Maybe they figured that sharper elbows will fly in the Senate.
Chris, thanks so much. Josh, weigh in. We've been talking about the busy crypto week and obviously Genius and Clarity and anti-CBDC moving forward. I think one of the themes when we talk about Clarity really is there's still a lot of work to do there. Josh, what was your take on this week? Were you surprised at kind of the success of getting these bills at least out of the House?
So, I mean, Crypto Week really lived up to its name, right? It was billed as being historic, and certainly it was. I mean, I think some things we were facing Trump's August deadline for passage of something, right? And so I think a lot of people have been waiting, and we've discussed on the show with bated breath to see whether we'd move forward with one bill or whether there'd be some kind of delay and a targeted push to pass them at the same time. I think obviously we have the win with the Genius Act. But I do think that there is a little bit of a kicking the can down the road to what Chris was just saying about, maybe a bigger fight in the Senate. Because even some of the pieces where at President Trump's urging, including on social media, to pass the Genius Act in the form sent down to it by the Senate, right, and abandon like the Stable Act, things like that. There were language, the differences of opinion didn't end, right? And so it's possible that actually when the Clarity Act goes to the Senate, that we're going to be battling some of the same things that some people may think we've put to bed with the Genius Act.
Josh, good point. I wanted to peel back some of the layers on Genius as well. And I had a conversation with a colleague, Wall Street TradFi person, David, not a DGen, not an OG like anyone you or the four of us know. And the comment about Genius Act was, well, this is a fob to the incumbents. Meaning, when you look at things like they can be payments only, they can't make interest payments for stablecoin holders, for example. David, let me start with you because you and I have had this conversation, and Chris, Josh, would love your perspectives as well. How much of what we're seeing develop in Congress is meant to protect the franchises of the banks, for example?
Wow, that's an interesting question.
I went off script again, David.
Look, I will say this. I do believe my view is that yield or revenue or interest or whatever you want to call it should have been able to be provided to stablecoin holders. I do think that companies will find a creative way around things to do it legally.
Meaning like loyalty points, David, for example. Sorry to interrupt, but I want to be clear.
Well, look at the example. Coinbase and Circle have an arrangement. Yep. So, if you buy USDC and you hold it on Coinbase, you get paid for 4.7, 4.6%. Obviously, that'll move up and down depending on what interest rates are. So, I would have liked to have seen that be part of this bill. But look, I think in order for this ecosystem to grow and for institutions to be involved, we needed legislation. So this was a necessary, if you're a legacy crypto person, this was a necessary evil to be able to be involved and be part of the ecosystem in the US. So I don't think it's just a nod to the incumbents. I think it's a mix of both. I think it was the clarity we needed so that all companies can do business here under certain guidelines. And yes, it does help institutions now that they can hold and transact in stablecoins.
Chris, you've been involved in the markets for a long time. Josh, let me just give Chris a little airtime. I'll come right back to you. Chris, you and I have had this conversation about the incumbents in the space. Tell me I'm overly concerned about with my interpretation there, or is David right?
I agree with David for the most part. I think the thing to think about that nobody's really talked about is the law of unintended consequences. In other words, how many companies come rushing out to say, we're going to launch a stablecoin, and then how much of an impact does that have on the traditional banking system? In other words, how much cash will be drained away from the incumbent banks and into these stablecoins? I saw a comment about a Treasury study that was released just a few weeks ago, or maybe a couple of months ago, that talked about upwards of $6 trillion could be drained from the traditional banking system. So it begs the question, what does that do to those banking models, and how do they fight back? They're not just going to lie down and take it.
Right.
Are they going to launch their own? And are we going to have this proliferation of all these stablecoins? And the other part of it is, how do you attract users to one coin versus another? Right. To your point, is it a loyalty rewards program? Is it yield? What is it?
Yeah. Josh, from the beachfront compound, weigh in on this. And, to Chris's point, what happens when Walmart has a stable coin? Like, what is your thought from a legal perspective on the impact of some of this?
Well, I'm a little bit, I guess, biased in what I may say because I've represented banks issuing stable coins and large corporates in the process, right, or considering. So I think we will see them. I think banks will be launching their own stablecoins to the extent that they haven't already. So I think that just is something that will be. But I agree. In terms of attracting people, I think this is a big thing with clients, right? Trying to say, how can you make this a commercial success, not just a press release? So I think in some instances, like, yes, obviously market adoption, there's a certain amount of momentum, right? Relationships and things like that, incentives, potentially financial, as you guys have talked about, but also other sorts of things. So for example, I'm aware of certain projects where we've tried to brainstorm and say, okay, well, what data do we as a potential issuer have that we can then repackage for our customers who presumably would also be the users of this stablecoin. Right. Of course, that's a whole nother set of laws and things like that, but really trying to think about where are the friction points and what information by issuing the stablecoin might you have about the people who would be using it that could be helpful to them, right? So just trying to find ways to have that kind of sticky loyalty. But I agree, it's a really interesting question. Just like we have, the altcoin universe, are we going to end up with a stablecoin universe like that? I think just very quickly, two quick things. One thing I was going to say about the yield, 100%, that is something that market participants, we know they want to do. I think it does open the door, though, to the question, if you think about what the SEC previously had said, right, about stable coins, and they have it, kind of carving out yield or, interest-bearing stable coins, right? Here we have the Genius Act that actually excises, essentially, from the securities laws and the commodities laws, these permitted payment stable coins. And if we add back in certain pieces, do we somehow end up back in that world we're trying to get out of?
Josh, Chris, David, thanks. David, I wanted to bring that last comment to you because we've talked about this as well. Philosophically, though, how is that different? Josh, you mentioned SEC. How is that different than the SEC approving staking rewards for an ETH ETF, for example? Why that dichotomy in your mind?
Well, those staking rewards are part of supporting an ecosystem. And so, folks who are staking or running validators are actually performing services to be part of that ecosystem. I think with the stable coins, it's really more akin to what's been traditionally viewed as yield or interest. So, I think that's one element, and I'm sure Josh will go into it a little more. But one thing I do want to say is that one thing that's not been talked about is that I think stable coins will be deflationary for people and for our country. Look at the fees that people are paying. Like we've talked about this before. You go into a local store, whether it's a pizza place or other place, you want to use, a credit card. They have been passing over the 3 or 4% charge to the consumer. And I'm sure we've all seen that in different stores. As stable coins rev up and become more part of our ecosystem, those pass-through costs should go away. And maybe it's 0.5%. And, so I really think this could be potentially deflationary, and for companies as well. If they have an ecosystem now, and we'll say Facebook, or we'll say Walmart, because that's been in the press. If they can bring their transaction costs from 2.8 to 3% down to 1% or under, that's meaningful savings to the bottom line. So I think there's a very positive deflationary element here as well that doesn't get talked about as much.
It'll be interesting to see how all of the stablecoins roll out through the balance of 2025 and into 2026. Josh, I softballed ETH staking, and I did see your comment in the private chat. Let me give you the floor. There's certainly a lot to add to that as well.
Thanks, Ron. So I think one of the, and by the way, I put this in the private chat as well. I have been working around the clock, hence my hair and everything else. So everyone at home. With respect to Rex Financial and Osprey, right? Some of these funds that have been talking about these first staked ETH funds. I think it's important to remember that there's a difference between these and the kind of ETFs that we've previously seen approved. And it's not just the staking, it's actually the structure. So without going into too much detail, some of these have been structured as C Corps, right? So that's a different kind of SEC approval process than you might have if you were actually using the more traditional ETF approval process that led, obviously we saw what happened with Grayscale and others over the years, right? That whole process of the rule changes and things like that. So a sequence is a bit different. And I would also say, I don't know about you guys, but I think a huge wave of things that I'm seeing in practice relates somewhat to this. At least that's how I think about it. But it also relates somewhat to what we've talked about in the past with Michael Saylor and MicroStrategy and those sorts of things, is these DATs, or digital asset treasuries, or DATs. I don't know if people are calling them DATs or if it's DAT. That's how
I think they're going with crypto treasury companies.
Yeah.
Yeah.
I think with the whole SPAC, set up, and this is just really appears to be going through the roof. But let me zip it for a moment.
No, Josh, it's a really good point. You helped David and Chris and I zip ahead to one of the items that I had on the agenda, which really gets us to crypto treasury companies. David, Chris, I'd like to kick off with you. We understand the model broadly. Operationally, I guess one of the concerns will be not everyone in the world can be a crypto treasury company. Chris, am I right?
You're right. You're absolutely right. But I think there are going to be different flavors of it. There's the, Michael Saylor all-in, 100%.
Yeah.
Derivative products, all these other things. Then you're going to have sort of the plain vanilla treasury companies. We're just going to hold on for dear life. We're going to create this treasury. And then I think you'll have companies that are going to just have a piece of their overall treasury in crypto, akin to a retail investor who puts, 2, 3, 4% of their financial holdings into crypto in the hope that it's going to boost their returns.
But the differentiators are going to get harder and harder, Chris, with more people playing in this game. David, I wanted to ask you about this as well. And, half jokingly, I mentioned, hey, we should start a Shiba treasury company to a friend who that was an entire different series of head explosions. But David, my concern is the premium over what I'll broadly call the premium over spot. When you can buy, call it XYZ Corp that owns Bitcoin for $2 because they hold $1 worth of Bitcoin. Does that premium get lowered over time, and how does that impact things like crypto prices, including Bitcoin?
Yeah. So I've been doing a lot of work on these, and there's so many dimensions. So I'm going to try and be linear in my conversation because I could really go all over the place. So let's take your first question. Why do people want to buy these crypto treasury companies? Don't forget that the wirehouses still haven't allowed a lot of their clients to buy, crypto ETFs. So maybe if they have an online account and they want to get exposure, they're using that online account for that. Or maybe it's an institution as well who wants a securities type wrapper to get exposure to these, crypto assets instead of buying on a crypto exchange, or they may not be able to buy on a crypto exchange. I think the crypto treasury companies themselves will differentiate themselves. Like I know there's one Solana company that is acting as validators and doing things to earn additional Solana in addition to holding them. I could see a place where you have a treasury company that staking some of their digital asset, lending some of the digital asset, and using the digital assets that they're purchasing to get additional returns on them. And so I really see there could be more dynamic companies than you just picturing, oh, this company's buying like 1 million Solana a week or a month or something like that. But the last thing to answer your question is the riskier the companies are in trying to raise money and trying to take riskier sort of buying strategies to create these companies, the more at risk some of those companies are, with their prices being above spot. And then, people will look for other things if they feel like they're mispriced.
David,
that was a lot. I know that was a lot, but I hope that made a lot of sense for me.
No, that was great. We could go down that rabbit hole, you and I and the group, for a long time. Josh, Chris, to that point, let me throw out something that's probably more provocative, Chris, than I wanted it to be. When we talk about these crypto companies, we're seeing SPACs come roaring back.
Yeah.
For those of us who remember, SPACs didn't end well for some companies, and I'm thinking back to different firms that I won't name. But Chris, is SPAC the way to make treasury companies real in the market?
I don't think so. And I think we're seeing a lot of fraud right now. And, if one thing has been clear in my capital markets experience is, the froth never lasts long term, right?
Yeah.
So at some point we'll see a correction in some of these companies. Some of them may go away. But it's just part of the normal growth process. It's akin to the internet boom, right? There was a lot of froth. There was a lot of dicey kind of bets that were being made, and I think you're going to see that here for a while. But at some point, the market will reach equilibrium, and to David's point, we'll see companies that have created a clear competitive advantage through whatever strategy they're pursuing, and others that are just chasing the bright shiny object at the moment are probably going to suffer.
Chris, so I should ignore the emails I get about get yourself a shelf company to get crypto treasuries, Ron. Josh, weigh in on the SPAC conversation as well, please.
Yeah, I agree with what's been said. I mean, I think at least what I've been seeing is people wanting to move exceptionally fast on these things, which is usually the case with, at least in my experience, is the case with SPACs. And it inhibits the ability to do the kind of diligence that one might ordinarily want to do and that one potentially should do, right? Yeah. Also, and this isn't a specific risk of a crypto SPAC. It's a risk of a SPAC itself, right? The arguable lack of transparency, lack of ability to really diligence, lack of knowing how the post-SPAC merger is going to affect things. I think there's a lot of things that are just inherent to SPACs. But I will say, actually, that's all I'm saying.
Josh, let me stay with you, and it's a really good point. I want to ask this question. And again, for everyone in the audience, thank you so much. If you've got questions, hit us up in the chat. Josh, from a law firm's perspective, this might be a weird question. If someone walks in and says, I'm doing a special purpose acquisition corporation strictly to hold crypto, do law firms look at that and say, you might not be a best fit for us? Like, how is that perceived at law firms?
Well, I would say it probably depends on the law firm. So I will say, I won't speak on behalf of my law firm,
sure.
But I am at a law firm that is headquartered in the UK. So every single matter and every single client that we consider has to go through full KYC, AML, financial crimes, reputational risk, and a whole bunch of committees determining whether it's okay. So I would say there are lots of questions, but I think it also depends on really whether there's a pre-existing relationship with the client, right? Do you know these people, or are these just people trying to throw this together and coming to you? But it's sort of that kind of assessment that you make anyway, right? I think
kind of the due diligence of what clients you take on.
Yes. And there may be some who, they've had these SPACs for a while, and they know they're clean, or, just various things.
Yeah.
I think also from the other side, though, the question of investors, potential investors in the SPAC who may be clients, them coming to you often on an accelerated basis saying, hey, I really want to invest, or I may want to invest in this. That's a whole other diligence process. That being said, I mean, for firms that are headquartered in the US, or perhaps not, at least not in the UK, there may be a very different, much shorter process.
Yeah.
And that has pros and cons, but I think obviously people should be diligent in their clients.
And the get rich quick crowd, because they want to issue a SPAC, is kind of the red flag that I've seen. David, I want to give you the floor. Chris, Josh, as you know, David and I go back a ways, and when he sends you a private message saying, I have more to add to this, you just give him the floor. David, go ahead, buddy.
Well, look, I think fundamentally you have to remember is that with SPACs and reverse mergers, it's really getting to the capital markets as quickly as possible. And a lot of these business plans are transparent. I think it's pretty simple. I think a major problem is there's a major sort of financial problem in how you value these companies, and the shares trade wildly at the beginning. And I think that's really can be dangerous for investors because it's really hard to value them at the beginning, and they can be super volatile. And then two, also who are the directors of these companies? Are they the legacy directors of the reverse merger company? Likely a lot of those folks may not have any crypto knowledge or experience. So it's really important to diligence, like you said, Josh, the principals, and really know who the principals are. And then another issue I've seen and come across is, are there enough authorized share to issue to do some of the things that the entity wants to do? And there are very specific time limits, that you can't raise money for a certain period of time, and rules in the bylaws, and it makes it complicated. So what I would say is the premise that wanting to use one of these means to get to market quickly isn't necessarily a bad thing. It's just it becomes very difficult to diligence, really need to understand who the directors are, and then it's very difficult to price at first, to really know what the price of spot is, and making those decisions if you want to invest.
Yeah, David, caveat emptor applies in all of these conversations. Chris, I want to pull you into, I want to segue a little bit, because in the background of all of the stuff that we're seeing around bills happening in DC, around crypto treasury companies, there's the ongoing percolation around tokenization across the markets. As co-chair of our tokenization working group, I wanted to deep dive on this a little bit. And I don't want to make this a political conversation, but we have certainly seen pushback in DC from not crypto fans and saying things like, well, if you're tokenizing equities, if you're tokenizing, paraphrasing a well-known senator, Microsoft, for example, that means they no longer have to comply with SEC rules. Chris, what's being misinterpreted in the use of tokenization across global markets?
Well, I think you have to look at the actual token. So, and how is it being created? So there are tokens that are being created offshore for the most part that intend to mimic the price action of Apple, Microsoft, pick whatever you want. That is kind of a gray area. What it does is it gives access to offshore investors who can't or won't invest in the United States. But at the same time, there are wild, price fluctuations on either side of the underlying.
Yep.
So, and does that token platform, is it simply just like a derivative wrapper, or are they actually buying Microsoft in their own account and then issuing tokens against it? So you really need to look at and dig deep in terms of what is the token. It's like, what is the thing that I'm buying? Am I actually buying something that represents the underlying and I have a potential call on that underlying, or am I just buying some derivative wrapper that's intended to mimic the price action?
So Chris, to that point, tokenization may not blow up the New York Stock Exchange, correct? I want to be clear.
Yes, I agree.
Josh, weigh in on this as well. We talk about tokenization a lot. I know you've got thoughts.
I agree 100% with Chris. And I think it's not just the people who are purchasing on the end, like the ultimate consumer or holder of the token, but even when you talk to folks, projects, teams, companies, right? Market participants who might want to do this, and they're saying, hey, I mean, whether it's somebody from a protocol, right? Or whether it's somebody from a corporate, as my colleagues across the pond would say, right? Whoever it is, when we're talking about tokenization, making sure that even at that level, before anything ever gets to the point of going to market, that we even are speaking the same language. A lot of times people will be like, I really like what I'm seeing with this particular platform or this particular company, what they're doing, right? And then they're like, okay, so you want to do the same thing? And they're like, yeah, but exactly as Chris said, the question of whether it's a derivative or whether it's you're actually getting exposure to the equity in this entity,
it's a complicated conversation. David, I certainly want you to weigh in, but I do want to give one more shout out to Chris about this. Chris, we've talked about tokenization for a long time, you and I, and within the WSBA. I wonder how much of the tokenization conversations that's happening now is impeding or is it helping RWA, right? Real world asset tokenization. We've been talking about things like real estate. I mean, where do we see that going in the wake of what's happening in the States?
So I think, when we talk about tokenization, what inning are we in? I think we're still in batting. I don't even think the game has really begun. We're seeing relatively small projects out there, sort of the experimentation phase. I saw one interesting real estate tokenization fund that is basically doing, I wouldn't call it reverse mortgages, but taking interest in the homes of elderly people who need more funds and issuing tokens against that ownership. But that is a real legal wrapper that represents real ownership of a percentage of those homes. And it democratizes the whole thing, because now I can invest as little as $10,000 instead of having to be in a legal entity that requires me to invest $500,000.
Yep. Chris, thanks so much. Shout out to Larry Miller, a longtime WSBA member. I'm going to ask the question for the group. Is the Anti-CBDC Act only a prohibition on retail CBDC? Does it allow institutional wholesale interbanks CBDC to be deployed? I have to confess, Larry, I have not read the Anti-CBDC bill in its entirety. David, Josh, Chris, I don't know if you have input on Larry's question, or we can get back to him at some point in the future. Larry, we'll have to get back to you, buddy. Doesn't seem the four of us know. Sorry, Larry. David, weigh in on some of the conversation on the tokenization as well. And then I got to go deep diving on market with you also.
Yeah. So, my company FTI has been involved with helping structure some RWA projects and tokenizing real estate. And especially in the Middle East and Asia, there's a lot more latitude, and the laws have been, really favorable. They've really been, drafted favorably to allow these concepts to flourish. Look, ultimately, tokenizing these real world assets is really about monetizing an asset or getting liquidity to an asset that is usually a fixed asset that you don't get liquidity to. So I think you really have to think about it in two buckets. There's one that's tokenizing securities that we trade traditionally that have liquidity and that trade freely. And then there's these tokenizing these real world assets where you're enabling illiquid assets to have access to liquidity. So I think you have to think of it in those two buckets. Yeah. So that's the way we think about it. And there's a lot of diligence that goes into that too, because, you can sell, real world assets and revenue streams, but what is, do you have a marketplace for them? Can somebody resell those? Do those people have to be vetted? There's a lot of sort of structure issues that need to occur. And I like Chris's analogy that we're still sort of, we're not in the first inning yet. We're still taking batting practice, it sounds like.
I'm just going to say it, David. I feel like we've been saying that for a long time about a lot of different things in this crypto space, but I'm with you.
Well, Ron, I will say one thing. There are things in the U.S. that took far too long to happen, but I think those were sort of regulatory forces and political and administration forces. I think this part of the ecosystem is not being hamstrung necessarily by those things, although there's some rules that need to be put in place. It's just, they really are more complicated. And so I think it's important to be mindful of that. Yeah. The last thing I'll say, for me, tokenized securities become really interesting when I can swap, 5 ETH for 50 Apple shares. That's when I think tokenized securities become really interesting. But that's my perspective.
David, it's a good point. Chris, go ahead. I know you want to weigh in.
So to David's point, I think that Commissioner Pierce's recent comments are really critical to this whole thing, because basically what she was saying was something that we've talked about, ad nauseum, which is just because the administration is more friendly doesn't mean the rules no longer apply. The rules still apply. The SEC's mandate has not changed, but they are much more open to having that discussion around, do we need to create safe harbors to make these projects real and get off the ground? What do we need to do? So it's a very proactive stance, as opposed to David's point about what in the past has been really regulatory and administrative roadblocks. So maybe that will get us out of batting practice and, to the first pitch. We'll see.
Yeah, Chris, David, really well put. I got to do it, David. I've got to go to the market commentary and review of some of the stuff we've talked about. Josh, what kind of a week has it been in the markets?
It's gone?
Risk on, yes. Thank you, Josh, for segueing us neatly into this. David, let's talk about it. BTC holding neatly above 117, 118, give or take. ETH now over 3,500. Kind of rising tide, lifting all boats on the alts. And I think it was 116,000 was the liquidation of a lot of shorts in the BTC space. David, where do we go from here? Is the rally kind of losing a little bit of steam or not?
No, I think we're starting to see a little bit of a rotation. There's been a lot of interesting things going on. And candidly, I've been really trying to enjoy my family vacation. So I've been inhaling it in doses. after long excursion days. But a few sort of big points is that, Ethereum has really trailed Bitcoin, on a year-to-date basis, and we're seeing some catch up with that. And it's manifesting in a couple of ways. One is the inflows for Ethereum company, for the Ethereum ETFs are going really, the volume is increasing extensively and the purchases are increasing. And I think ETH flows for the ETF, I think for BlackRock's ETF for Ethereum, actually surpassed Bitcoin's 1 or 2 days this week. So I think that's been a really important note. Ethereum was really trading in this range between like 2,000 and 3,000 for quite a bit, and pushed through. I won't go into all like technical analysis, but it pushed through this megaphone pattern, and so after pushing through this, it's kind of moved forward to an area where we could see, us getting to 4,000 pretty quickly. The last thing I'll say is I think what you're seeing is a rotation now. I think you're seeing these treasury companies buy Ethereum. You're seeing a lot more Ethereum inflows. You're seeing the prospect of potential Ethereum staking ETFs. So you're seeing a lot of bullishness in Ethereum. And I think as you see that, you're also going to see people looking at other altcoins.
David, good point. And for the audience, Josh, you and I know all too well that David is desperately trying to enjoy his vacation. But I will wake up to text messages at 2 or 3 o'clock in the morning with very specific critiques of what's happening in the crypto space. So David is deeply ingrained in the market. Josh, Chris weigh on this. And I know, Josh, it's not part of the day-to-day, but I've got to imagine some of what's happening in the crypto market really is impacting the day-to-day work. You're doing 20-hour days, give or take, maybe more. What are your thoughts collectively on what's happening in the crypto markets?
So, well, I think some interesting things, along with what David was just saying about ETH, and certainly with that is coming up in some of the contexts of what I've mentioned, which I won't mention here, but just on the earlier part of this show. But also, I had been reading something about how certain VCs were expressing concerns. I don't know if this was actually true or if it was just the writer coming up with ideas, but expressing possible concerns that maybe the alts the altcoin market was never going to be like as robust, right?
Yeah.
I do think, though, I mean, my personal view, not any kind of investment advice, is that of course I think there's going to be a robust alt market. I think we're just seeing right now. Sorry, there's an echo here. Do you hear that? Okay, maybe it's just a lion all of a sudden. But just this idea that there could be very large returns in some of these lesser known tokens, or certainly lesser known than Bitcoin, perhaps, and perhaps also ETH. That will still happen. The focus is on Bitcoin and ETH and things like that because of the large institutions, right? But it does make me think about what could be next in terms of, as David was saying, a rotation, like what other rotation could be next, and also a question about the meme coins, right? Because often, I haven't been looking at their prices, I'm sure you guys have, but often those have tracked with Bitcoin historically, as we've talked about. So whether similar gains are being seen with certain meme coins, I'd love to hear from you guys.
David, you got to pick up the meme coin thing, and Chris, I'd love you to weigh in. I wanted to ask you about meme coins. I didn't know if you wanted to go there.
I really want to create a meme coin index just for our podcast, just for a little fun. But there is a correlation between some of these meme coins trading and Bitcoin going up, and I think it's a couple of things. I think Bitcoin, like if you think about it, it's expensive. It's like 117, maybe it's 118 today, 1,000. And these meme coins are very volatile. And look, some of them, are volatile in a way that people, who know what they're doing have been able to make a lot of money on them. Then other people buy them because they think they're interesting and that they think they can make a quick buck. But there does seem to be a correlation. And look, I've joked around with the two of you. But like Bonk has gone up a lot. So some of the sort of layer ones for the meme coins that are being built on top of those platforms have gone up and done pretty well. And there are others that are correlated to Ethereum that have done well in this current market. So I do think there's a correlation. I want to answer one other point of yours, Josh, is that some people felt because so many people were buying the Bitcoin ETFs and Ethereum ETFs that instead of selling some of the, their spot Bitcoin and ETH and going into altcoins, that people won't sell their ETFs and go into altcoins because they're either in ETFs or, they don't trade their ETFs, or that they are not, they don't have crypto accounts and aren't buying, other alternative coins. So I think, there's been like talk either way. I still believe there's an altcoin season coming, but there is a fair point to say that the buyers of the ETFs aren't necessarily the folks that are going to be the buyers of altcoins.
Yeah. Chris, is the Brodersen family office your portfolio managers? Are they weighing in and buying meme coins?
No. So the thing about meme coins to me is it's the casino analogy in many cases, right? Are you going to the casino knowing that, hey, this is going to be fun and I may win or lose some money, but I'm not betting the ranch. So, David, you mentioned the blackjack thing, and good for you. And you went out and bought all these meme coins. So now you're doubling down, right? So that's the perfect casino analogy.
Chris, Josh, David,
you could share that with the audience, Ron.
What's that?
You could share that anecdote with the audience.
I'll let you do it from the super yacht, buddy. You were there.
Okay. I had played in a blackjack tournament for the first time, and I was very fortunate. I won the tournament. So I messaged with Ron and Josh, and I said, what is more crypto degen than taking my casino winnings and using it to buy some meme coins? So Ron and Josh have a timestamp of when I bought them, and I'll just say that they did pretty well. So I'm keeping the degen rolling on this little piece of the.
David and Josh and I go back a long way. Josh, we just get text messages now that say bonk. Like I just out of the blue, just bonk. David, Josh, Chris, we've got a little bit of time. A couple more things I want to cover. David, I want to start with you again, and the reason for this is we've talked about wirehouses in the past. You and I have had this really broad conversation with Josh and Chris and others about kind of the broader financial intermediaries getting more deeply involved. David, we might see an executive order that allows for things like crypto and gold and other assets to be part of 401ks. Is this a good thing or a bad thing?
I think it's a very good thing. I've always believed that people should have choices of their funds, whether it be retirement funds or otherwise, and shouldn't be limited, in what they choose to invest in. Now, I think you need to do it wisely. And I think if you're not really thoughtful about it, you should rely on advisors and others who are. But I am really not a fan of, not allowing people or withholding options to individuals who want to buy certain things in their retirement account. Look, let's take gold, for instance. Yeah. Why shouldn't somebody, if they want to allocate part of their retirement to gold, be allowed to do that? It would have been a big winner for some people. And I just think, I know there's this tension of paternalism between the government making sure people are careful about what they're investing in their retirement accounts and people wanting to have access to different products. But I think ultimately everyone needs to take their own responsibility but have the ability to invest in what they want to.
David, I think we've agreed on that broadly for a long time. Josh, Chris, when we look at this potential executive order, I guess one of the questions I throw out there is, what about these large intermediaries or 401k providers, for example, that have publicly, David, to your point, said we will not let our clients hold crypto essentially for their own good? Does that argument evaporate, Chris or Josh?
I don't know if it evaporates, but to David's point, there's some paternalism going on here. What really has surprised me, let's step away from the 401k thing for a second.
Yeah.
Post the ETF approvals, it wasn't a surprise in my mind to see that the wirehouses were not rushing to the table, right? They need to do their risk assessments. They want to see portfolio performance. They want to see the managers, but enough time has gone by, right, to show that, these wrappers are real. That they're run by grown-ups, that they're managed effectively. So why haven't we seen the aperture open up with the wirehouses, not much within 401ks, but even just managed accounts? There are still a number of wirehouses that either have outright prohibitions or a non-solicitation only policy.
Yeah. Josh, do you have any points on that you want to raise?
So I would say one thing is you never know how people's views will evolve. We've certainly seen that with some prominent names in traditional financial institutions. But also, I would say just looking at it the other way, and I do think that having the ability to invest via, in people's 401ks and have crypto holdings, I think that would be very positive. I do think, though, that some of the skittishness may come because we have seen, just a few years ago, certain large pension funds, right, that invested in things like Celsius, right, and then had kind of adverse effects, obviously, when Celsius was no longer. So I do think some of that may still be going on in people's heads. But I think the further and further that recedes into the past, the more and more our laws advance and all these sorts of things advance, I think that will perhaps become less of a concern. May I just mention two quick things?
Of course.
So one is a question, but before I get there, I just have to say, David, on your whole blackjack winning and your whole, meme coins doing very well. Like your crystal ball, as I noted in the text, is on fire. It remains on fire.
The David Brill fund should come soon, Josh.
I feel like it's going to be, there's going to be a movie. It's not going to be like Harry Potter. It's going to be like David Brill with the anyway, sorcery, wizardry. But a question really that I've been wondering about for a little while has to do with these meme coins for a moment and the correlation that we were talking about. So yes, there has seemed to be a correlation, but why? If you think of Bitcoin as digital gold, right? The one that people think okay, this is the stalwart, the bellwether, it's, versus these meme coins, which as you guys were describing, sometimes they're just people having fun with it, right?
Pump.fun.
Yeah. So why are they correlated? Why?
I just think that as Bitcoin goes up and people see that, people who are in crypto are making money, that they want to see where are there opportunities for them to make money. And obviously some people take a longer term view and will be in Bitcoin, Ethereum, or some of the other big altcoins. And some literally want to play, the lottery. And, if they find the right meme coin and has an interesting community, and maybe there's some facet about it that's kind of captured the imagination, there's opportunities to make really big gains in them, but there's also opportunities to get totally wiped out. So I think that's why I use the casino analogy. And again, I'm not suggesting anybody should buy a particular meme coin. I just thought it was an appropriate analogy that rolling blackjack winning seemed to me like the true degen analogy for this group.
Josh, if I could, and I'd love Chris's perspective, and I think the three of us, Josh, David, have spoken about this for a long time. For me, the L1s and the alts that have good use cases are investments, and this is not investment advice. But David, Chris, tell me if you disagree. The memes in many ways are turbocharged speculation that might work. Many won't, but I think that's an interesting way to approach it market-wise. David, Chris, do you agree? Josh?
Totally agree. I think people are, they're looking for.
I will tell you
that they're hoping to find the next big winner.
Yep.
Akin to the lottery.
Yep. David, go ahead, buddy.
I do believe that meme coins are going to evolve into communities. That there'll be a meme coin and there'll be real utility with it. And then we can wonder whether they become a security or not if there's utility, but that's a whole nother story. But I do think that they're going to become communities, and I can really see where owning them will enable people to buy concert tickets early, to have access to certain events. And I really see that as what will evolve out of this. I don't know how long that will take, but that's sort of my end game with some of the meme coins anyway. But I agree with Chris's point. It's kind of like meme coins in a way. It's kind of like going to the roulette table.
Yeah,
you have a feeling, you like a number, you put it down a number. I don't know if the odds are 1 in 36 or whatever they are in roulette, but there's some of that too. But there are people who are really good at these and who understand the market trading of it and do very well with them.
Yep. David, Josh, Chris, thank all three of you. We're almost at time. We've got a few minutes. I wanted to raise something. I saw a news article item, Josh, David, Chris, that brought me back to the early days when we talked often and frequently about decentralization. And you said degen. I don't know if this qualifies as degen, but it seemed as OG, David, as it gets. Some of you might have seen the news that Jack Dorsey created an app that uses Bluetooth to allow participants to share or exchange BTC directly with zero intermediary. And it kind of struck me straight in the face that that's exactly the decentralization everyone was talking about a decade ago. Chris, Josh, David, are we off course from a decentralization perspective?
Well,
that's a hard one.
It's a hard one. I think it depends on who you ask, right? I mean, if you talk to the hardcore OGs in the space, they would say yes, absolutely, that crypto is being eaten by TradFi. And then as you get down the scale of your enthusiasm, people would argue, no, we haven't gotten really away from it, because what we're doing is we are democratizing certain things like banking the unbanked, et cetera.
Chris, thanks so much. I know David's private helicopter is about to land on the boat. He's got to go in about a minute. David, say goodbye to the audience, please. Tell us your thoughts, and we're looking forward to having you back, and glad you're enjoying the vacation.
Thanks. Look, I've had a great time. I have to say there are parts of Europe that I hadn't been before that are beautiful, and we can talk about that sometime. But the one thing I will say, I was in Montenegro, this trip, and Croatia, two places I hadn't been yet, and they're really stunning. So really worth seeing. Just quickly, I really think pay attention to Ethereum and altcoins. I think we're really going to start seeing some of a rotation. I think Bitcoin dominance is going down, and what that means is that the amount of total market cap of all of cryptos, Bitcoin has been most dominant. As it starts receding, we see the value go in other altcoins. So I think we're going to see some sort of rotation in altcoins, and some of the gains, hopefully, or just some of the action that I think people have been waiting for a while.
David, enjoy the well-deserved vacation. Best to the family. Josh and I will want to see pictures at the next roundup. Good to have you, buddy. Enjoy the trip.
Take care.
Chris, Josh, as we wrap up, I just wanted to ask, I've got my homework, and thank you, Larry Miller. I will be reviewing the Anti-CBDC Act more thoroughly. George Tavares, thank you for joining us, and to all our fans out there. Chris, Josh, what are you going to be focused on in the coming week? Chris, why don't we start with you?
I'm really interested to see what happens in the Senate with clarity. Do they even talk about it? I mean, we're coming up on the August recess, right? What's it, the 18th of July? So how much dialogue is there, or does it just kind of die on the vine and they'll take it up, post recess? I don't know.
Yeah, which means we end up running into election season because we've got the midterms next year as well.
Correct.
Josh, from the beachfront compound, I know you've gotten away and been near ashore, but I know you're super busy. What are you focused on?
I'm focused on work. I also, frankly, I want to dive into these bills more just to make sure. Obviously, I've read through the Genius Act when it was sent down from the Senate, right?
Four versions before, yeah.
But also just trying to see okay, exactly what the status of these bills that now have volleyed back or volleyed over to the Senate, what they're saying, right? The little granular pieces. So I want to better understand that. Just mostly work, but also trying to enjoy, these are the summer months. So trying to enjoy sunshine when I can.
Josh, good points. I will be tapping our policy experts, Dina Ellis-Sorokin and Adam Goldberg, to get some of their thoughts on the different bills, as well as planning for our October event. For anyone watching, the WSBA's annual event is taking place live and in person in New York City, October 23rd. The public announcements will be soon. You can get to see the Chris Brodersons and Josh Klaymans of the WSBA live and in person at the event. Let's leave it there. Chris, thank you so much. Great to have you as a guest. Josh, as always, a privilege. I expect we'll be getting text messages from David later on tonight, Josh, with some market action. For everyone in the audience, thank you so much. If we missed any of your questions, info@wsba.co. We will see you all next week. Take care. Bye-bye.
Thanks, Chris.
Thank you. Bye-bye.